Good morning. I hope you guys doing well and welcome to today's edition of the London Session Open. Today is March 15th, 2019 and it's 9:30 a.m. in London when we are conducting this live webinar. My name is Alejandro Zambrano and I'm the Chief Market Strategist of ATFX. Some of you guys might know me from dailyfx.com. I used to work for that website and the broker FXCM from 2009 until 2016. After that, I set up my own company, londiniumfx.com, and I also been with brokers such as Amana Capital. And now I'm working with the great team here at ATFX.com. Now, what we're going to do, as we usually do, and you know the drill, we're going to take a look at the markets and see if anything interesting is going on. I'm going to try to share with you guys some interesting ideas and sort of my views on the market and where I think people are, putting stop loss orders and take profit levels. Hopefully, this could help you with your own trading, and we are here to support you with your own trading, but obviously, we're all adults and we're all responsible for our own decisions when we do our own trading accounts. So please bear that in mind. Please also note that financial markets trading is not easy. It's actually difficult. And the fact that we use leverage tends to sort of cause a good number of people to actually lose money. Okay, let's kick off. And we're going to begin with the euro, which is actually so easy to analyze because there's actually nothing happening here. So the market is, within this old range, and we haven't really done any major changes here. When the market is trading sideways like this, I like to stay away. And I just want to trade on a break to the limits of the range. So a break to 111.75 would cause me to become interested again. Alternatively, break something like 15.67 could also be interesting. But we're trading sideways between these two levels. And if we break to the upside, maybe we could drift upwards. And right now, I think because we're on a slightly low downward compression, should go lower. But I wouldn't put any money on this. Here's the GBP versus the USD. So not too much of an action yesterday, and that makes perfect sense because the market was projecting and anticipating that the sort of Parliament would vote for an extension to Brexit, to the Brexit negotiation. So what's going to happen now, as far as I understand it, Theresa May will put her deal to vote again next week. That will be the third time, and I'm guessing that she will try to go to the EU and try to get some sort of changes to her deal. So, the biggest issue is the backstop and the hard border between Northern Ireland and the Republic of Ireland, and what happens if they can't solve that issue when sort of negotiation period is over. And what technically happens is that the UK can be stuck in an agreement with the EU. And if both parties, the UK and EU, decide to break away from there, the UK can technically and legally be stuck in that arrangement forever. So Brexiteers, and I mean even myself, I consider myself relatively neutral. Uh, I think that it's not a good deal if you can technically be stuck with someone forever and you don't have the right to break away. That's not good at all. That's really bad, really. So I think both on the Leave camp and the Remainer camp, they want to see changes to that. They can't go through with the way the deal is right now. So she will try to negotiate that, and if that doesn't work, then most likely there's going to be an extension, and that is probably the most likely scenario for now. We'll have an extension, and then that extension lasts until June, and then by June they need to make some sort of decision what they want to do next, and that is when we might have a totally different deal, maybe second EU referendum, and potentially having a general election. I think most likely it's just some other deal. That's what I think. So I think the way the price has reacted so far, it's sort of as the market sort of understood that we're not going to have a hard Brexit, is moving away from the lows here. And I mean, technically, this is some fancy looking head and shoulders pattern, just that has like a double bottom, double low. And you can just looking at the chart, you can clearly see that if we start to take out these levels here, we can have a significant rally. And if this is treated like a head and shoulders, um, then we're looking at maybe going up to 142. And this wouldn't be unlikely at all. Again, if the next deal is slightly softer, or there's risks of a second EU referendum. As well, here, if you look at this from the short-term perspective, we are sort of guided higher. We don't have to draw a trend line, actually. I don't like trend lines when they're used this way, but I'm just putting it out there so you can see what I'm referring to. We are creating higher and higher lows, right? It's very obvious. And I wouldn't touch this, but I guess some people, when the market goes down to maybe 130, 131, they accumulate a bit of GBP down here, and then they sort of target the highs just because it's more likely that we have a slightly softer version of today's Brexit deal, or no Brexit altogether. Dollar versus the Japanese yen. Again, sort of a bit like the euro, a bit sluggish, but you do have a bit of momentum. This is just a proxy for stock markets. This is what it is, okay? It's not necessarily anything that's going on in Japan or anything that's going on. Well, obviously, definitely what's going on in the US, but nothing related to what's going on in Japan. I haven't covered or really bothered with Japanese data since I joined. Well, since I started looking at the markets in 2005. I think the only time it was really worth it was when they were starting on with their massive QE programs in 2000, and I think it was 2013. That was the only time it sort of really mattered. I think it was here and then here. Otherwise, the guide to this market never really been economic data from Japan. I don't envy the person that needs to cover Japanese data and try to use that to explain what's going on with the Japanese yen. There's very little, if any, correlation. And it just has to do with their specific situation where, they have consistently low inflation, economy sort of, everything is sort of very bland and average all the time. It's not a lot of movement or changes to their economy. Now, trend is bullish. If we revisit 111.23, I think people are going to buy. If we take out the high, I think also people are going to buy. This is the S&P 500. The market, moved lower. I thought we were going to get head lower, but the market did not want to play along. Any sort of short position would have been stopped out a few days later at entry or with a reduced stop loss. So it's nothing bad trying the bearish side. You just need to know when to move away, step to the side. Here's the S&P again, and I think if we take out this week's high at 2821.7, probably going to trade upwards, and it's probably going to be like a slowly little rise, but definitely going upwards, I would assume, and I will be bullish as long as I shoot about 2815.8. Situation is very similar for other markets like the Nasdaq 100. And I think it's time to sort of pay more attention as well to German DAX. As you know, I talked about buying at these levels. So far, the market has not moved a lot since almost a month here when I first, not with them first because we first turned bullish down here, but since we sort of started to reach these levels and had the break of this head and shoulders pattern with this head, and this sort of this right shoulder, this left shoulder, and this head, which happened here, we have gone upwards, but it's moving in slow motion. Market is up with 2.31%. But with US stock markets moving up higher as they are, and this market is moving closer and closer here. So when you start to clear this whole section here, by taking out this high here, the next resistance level is 11,800 and a half. And then beyond that, there's not a lot of resistance until we start to reach these levels. The head and shoulders and pattern itself suggests we can go all the way up here, which again wouldn't be not that unsurprising, especially if the US and China can arrange some sort of a deal that removes all tariffs and two makes it possible for companies worldwide to be more comfortable doing business in China and setting up businesses in China with less red tape. So it could be a good opportunity for big international firms that want to add their exposure to China to actually go in and do that. So I think this is something that a lot of people are not talking about, and I think that's something that's going to creep up on people after the fact to get that deal done. The only time it would be a bad deal if they just agree that all right, China's was going to buy more agricultural products and things like that. But if they're pushing for those structural changes, the way you operate over there, make it easier just to set up your own business, then I think that could fundamentally change things because it's as you know, it's a huge market. And I think that's pretty much it. Actually, I'm forgetting about crude oil prices. So this is crude oil prices. 57.89. That is the prior high. We took that out. We're going upwards. Things are moving upwards. It's just going up for a few days, trading sideways for 2-3 weeks, almost giving back all the profits, and then moving upwards. There are trends. It's just that they're silly slow, and there's nothing we can do about it except try to modify stops, and more importantly, just lower our expectations. A lot of people are always sort of very keen on, oh, let's generate a lot of money every month, but fortunately, it doesn't work like that. The market doesn't work like that. It's literally many times for me, in my case, it's a bunch of break-even months, and then 2-3 months made all the profit for the whole year. That's it. Now, crude oil again up, probably down a bit. If it goes revisit the breakup points, I think people are going to buy as long as it's above the low of March 12, which should be, it's too slow. Then we're in an uptrend. Finally, gold prices revisiting the sell zone. We had a decent bearish reaction yesterday. You see the market went all the way up and then all the way down. I think if we revisit the sell zone, people are going to sell. Can of course just create higher high or upwards, but again, I don't really know exactly how this is going to play out, but I know that people are selling here. So far, it's looking relatively good. If we just focus on this little section here, maybe it's doing a head and shoulders with a head, left, right shoulder, and head. And then this by itself sort of causing the market to decline by $17 down to this level here. When and if we start to take out this level, I think it's fair to reduce the trend funding level from the high or the stop to this level here. And this will be really interesting. If we do this, then the effective drawdown was $4.79. And if we get out here, the effective take profit will be 3.55. So this will be a 6.59 times risk reward ratio trade. But I think it could even be better because if we trade down below this level, I think we're going to trade even lower. I think at that point we could probably go, all the way down here. So then you're looking at crazy move like 13.51, but I don't think it's going to be that likely that it's going to be very, very easy. Probably on the way we're going to be stopped out, but it's definitely looking interesting. And I think we can see this go lower. Again, if we revisit the sell zone, probably going to go down. For now, though, again, stop loss, trend funding level still at the highs here. Okay. So do you guys have any questions? We have a new person here, Alfred Mendy. Thank you so much for joining us this morning. And we have a lot of, obviously, the regulars. We have Don Holm, Marvin, Vincenzo, and Sahid. Good morning to you guys. Thank you so much for joining me this morning. I hope you like this. So you sign up once, right? This link is the same link you need to sign in for the rest of the next couple of months. I think we're definitely going to continue with sort of GoToMeeting for a few more months, and then we'll see if we change the format and maybe do YouTube as I used to do before when I was with Londinium. But for now, obviously, we're going to do GoToMeeting. So you receive an email as well, I think 1 hour before every event. You can unsubscribe to the emails as well if you don't want to. It's a little thing, though. On Sunday evening, I'm flying to Hong Kong to the offices of ATFX over there. That means that I will not be able to do the webinar on Monday because I'm gonna land, I think, 6 p.m. Hong Kong time and go straight to the hotel and have dinner and then go to bed so I can be active on Hong Kong hours on Tuesday. So I will not hold the webinar on Monday, but on Tuesday I will most likely be able to hold a webinar, and we'll do that from the offices of ATFX Hong Kong. Good morning, Vincenzo. Thank you so much. Guys, don't be afraid to say hello in the little chat box there. But let's save that for Tuesday. I'm gonna log out now, and I want to wish you guys a good weekend and happy trading. Keep an eye on the DAX. I'm finding that really interesting. Hopefully, we can have a little push today to the upside. We talked about buying here, and a break to the high. What you do is up to you, but I think a break to the high could potentially be a possibility to buy a little bit more, because most likely the stop on the DAX can most likely be reduced to something like 11,475. And if you have a really solid close, so we closed at 11,761 or something like that, then the stop loss might even be reduced to entry here. So that means you have no risk, just profit, and then buying a bit more to beef up and make more money on the move. That will be a fair game, I think. All right. Have a good day, and I'll see you guys tomorrow or on Tuesday. Thanks.